Have you ever considered where wealth generation really does come from? Today's video, we're going to be looking at an extraordinary effort that it seems a lot of people have kind of forgotten. That is living below your means. Now, overall in the United States, we have over $1.06 trillion in credit card debt, which means that a lot of you probably haven't heard of this concept, or it is a brand new concept that you're just hearing about today, which we're going to go ahead and explore. Now, to really live with inside your means, that means that the money that you make minus the money that you take home, there is still money left over. Meaning you are not borrowing to go above and beyond your income, and you're not supplementing income with that credit card debt. Now, again, we're going to run through 10 steps, guys, really to make it possible for you to live with inside of your means. Number one, creating a detailed budget. Now, there's a reason why most financial advisors, counselors talk about a budget. It is really every dollar, every purpose. The budget outlines all of your incomes and your expenses. This is the first and really the kind of official tool when it comes to managing your money, because you know exactly what is coming in, you know exactly what is coming out, and you know where you can make some fine-tune adjustments. Now, differentiating between the needs and wants is number two, which means there are things that you need. Now, this is food, this is transportation, this is shelter, and there is also another bucket of wants. And it seems this day and age, guys, a lot more of the wants have prioritized the spending, where it's not the 50, 30, 20 anymore. It's more like the 50 or 60 for the needs, or what people justify as needs, and 30 to 40% when it comes to that want category, leaving nothing for savings, nothing for emergency fund, nothing even for debt repayment. You really have to break this down, guys, and think of what is the necessities. Where can you cut back on anything that is non-essential? Again, living with inside of your means is what we're trying to do. Now, with that, the embrace frugality. Now, of course, the frugal mindset is something that a lot of people have really focused on, but it is not just being frugal as in saving all your money and not buying anything, but it also delves into a whole part of being cost effective and alternative. So that might be something like buying generic brands instead of name brands, shopping during sales, stocking up when you have the ability to save money, even looking at thrift stores, looking at, getting cash back, or getting like Rakuten that gives you cash back for online shopping. There are a lot of places that you can buy the exact identical product that you're looking to get, whether it is a generic brand or if it is a name brand, at a much lower discounted amount. When you look at bargain shopping, again, looking at like our Aldi's, looking at a couple different alternatives, you can find a majority of the identical products, sometimes even the identical brand name, just at a much cheaper cost. Number four, we look at cooking at home. Now, the comparison of shopping and cooking at home, I know there is a little bit of time and effort that kind of goes in with this, but the meal prep at home can make a really big difference. They said you can save 2 to 3 times the expense of eating out versus cooking at home. Not only cooking at home is about 3 times cheaper than what it is going out, cooking at home is also and has been proven to be a much healthier strategy of what you're actually eating, what you're consuming, what you're putting inside of your body. And then, of course, on the flip side, when you're putting good things into your body, you're going to feel healthier, you're going to feel stronger, you're going to be a lot more dedicated to cooking more at home. You can also take an adventure approach to this, guys, looking up recipes on YouTube, on Google, on wherever you find your recipes or wherever you want to, and really experimenting with what you're getting or what you're making and see exactly what you can do with this. Number five, limit the impulse purchases. Now, this is really one of the biggest things, guys. You have to train your brain to resist the impulse purchases. A majority of purchases, if you're buying them on an impulse, either one, do you really need the item? And two, can you find the item for cheaper elsewhere? Now, again, looking at the needs and the wants, there is a lot of different ways to get discounts on different merchants, even looking on online coupon codes, waiting for a sale, waiting for Black Friday, waiting for holidays. There's a lot of different ways that you can also kind of get, again, the same products and services for a much cheaper amount. And also with the impulse purchases, if it is a larger purchase, take a cooling off period, 24, 48 hours, really determine if it is something you need, it is something that is going to work into your budget, and exactly what value does it add. Again, I think that's a big part of what people have kind of, as the consumption of Americans have kind of increased, we kind of forget of what is the value that we're receiving from the item that we're purchasing. Majority of people, it is very short term, or there is really no value short of the feeling when you get the item, when you get the purchase, when you get something on your doorstep in the mail. It's really doesn't have the value for a majority of things that we do buy. Number six, we look at negotiating bills and expenses. This is really a part that you can, whether it is your cell phone provider, your cable provider, your insurance provider, there's a lot of different ways that you can negotiate your bills and your expenses to get you a better deal. A lot of the reoccurring expenses, even looking at, remortgaging or getting to a lower rate, refinancing auto loans, consolidating some of your credit cards. There's a lot of different ways to lower that monthly liability. We can put you right in line with being able to live with inside of your means. Number seven, automating the savings. Now, this again is one that I'm really, really a big fan of, guys. You have to set up automatic transfers from your payroll to your savings account or automatic transfers from your checking account to your savings account. Treat this as a non-negotiable. Put this in the need category. Don't put it into, hey, it's the very last thing I do at the end of the month. If I have any money left, or if I need money, I just dip right into it and take it right back. This is really the fundamentals when you look at your financial goals. This is going to give you the ability with the automated savings to go ahead and have that savings in place. That way, if an emergency does happen, if something does come up that is an unexpected expense, you already have the money set aside that is there kind of earmarked for that retirement, for that unexpected expense that does come up. Number eight, the lifestyle inflation. Now, this is huge, guys. The lifestyle creep, the inflation creep, keeping up with the Joneses through so many years. It has been given so many names and assigned kind of so many tasks. What this means is as your income raises, so you get a new job, you get a promotion, you get a good incentive, you have a good sales plan, redirect some of that additional income into savings, investing, debt repayment, not spending the money, guys. A lot of people think now I got a better paying job, I need a bigger house, I need a better car. Again, think of the value, what it provides. If you're buying a $30,000 car to a $50,000 car, what is the additional value you're going to get out of that to really avoid the lifestyle inflation or the lifestyle creep that we see? Number nine, and this has been something that is kind of absolutely crazy, kind of like a pandemic, it is the subscription services. Really monitoring, and there are a ton of companies out there that will evaluate the subscription services and make sure that you need to cancel those ones that you're not using, ones that you deem are non-essential. And again, we're trying to get the budget back in line to really the income and the expenses that are going out and living with inside your means, meaning on a normal 30-day period, so on a monthly cycle, you're not borrowing money to supplement exactly what you got. Now, internet, of course, with those streaming services, you can look at streaming services, magazines, monthly subscriptions, anything that is reoccurring. And for a majority of us, it's the $2, the $5, the $7. Guys, that adds up, and it adds up in a really big way. Make sure you're monitoring and checking out those subscriptions. And the final one we look at is the debt repayment. So the biggest tool we do have in our toolbox is your income. The more that you're giving it away, and that is probably one of the fundamental ways, guys, that I really do see it, is if I have and I'm paying interest on credit cards, if I'm paying interest on a mortgage, on an auto loan, on an incredible amount of things, I have to work X amount of dollars or X amount of hours to get that money just to give it to someone else, your financial institution, to go ahead and give me what I want. Now, this is where you kind of have to break the cycle, the debt repayment. And that is the reason why when you look at Dave Ramsey, when you look again at a lot of really financial gurus, the debt repayment and the debt elimination is priority number one, because as soon as you get rid of that debt, you will have the ability to go ahead and save money, to invest money, to create wealth for yourself as you start to live within your means. That'll do it for today's video, guys, and I'll catch you in the next one.